So here we have the chart 15, and I put the arrow on that particular bar to show you the most common form of Danielcode number recognition. The low of the bar, the market's going down, the low of the bar is on the Danielcode number. If the market was going up, we'd be looking naturally for the high of the bar to stop and recognize the Danielcode number. We move on to chart 16, which is the same chart, but we're now looking at a close-only chart where only the close of the bar is plotted. You'll see that the previous low, on which the blue arrow now is, came at 791.70. And if you just flip back to the daily chart, which I showed you previously, chart 15, it appears as if the bar has gone through that Danielcode number at 791.70 and not recognized it. In fact, markets can recognize these Daniel numbers on the daily highs or lows, or occasionally, and I emphasize occasionally, it's probably only 1% or 2% of the time, they will recognize the numbers on the close. So if we look at a close-only chart of the same chart we looked at previously, we now see that we can find the August low that appeared to have slipped through the Danielcode number on the close-only chart. Look at the arrow, you can see vividly that we got market recognition of the Danielcode number on the close. And that was the alert to us to be ready to trade the reversal that would come from that signal. So we're now looking at trying to isolate which of these levels and which of these Danielcode numbers will turn the market. We've seen previously that turns can come in a variety of forms. They can be intraday turns, they can be end-of-day turns, and any variation in between. So let's take our existing chart that we've been looking at, and this is the COMEX Gold daily chart. You'll see it's the same chart. We've got the two arrows on it, the first arrow marking the close-only turn that we identified at the Danielcode level at 791, and the second arrow is identifying a daily low sitting right on the Daniel number at 738.60. Let's add some indicators, and at this stage we move beyond the realm of the mystical powers of the Danielcode and we move into the hoary world of traders' tools. And I expect that many of you will have your own indicators, and the idea is that you use your own indicators and your own trading techniques, but add in the Danielcode numbers to give yourself a point of focus. The indicators that I'm going to show you here are very basic, very standard, straight out of the charting toolbox. I'm sure you'll have much more sophisticated indicators, but strangely you will find that these ones do the job very adequately. So what I've done here on the latest version of chart 16 is I've added a fast and a slow stochastic. Now a stochastic is just a pictorial way of representing where price is in relation to where it was on the period that you set it for. And then there's a mathematical expression that converts that into an oscillator. That is, it will move up and down the chart and express itself as a number between 0 and 100. The lines then, if you follow them, you have a faster line and a slower line, and it's the crossing of the lines that makes, presumably or supposedly, a turn signal. So what we've done here is we've added a slow stochastic, that's a 1433 stochastic, and we've added a fast stochastic, a 533 stochastic. Now, for the daily charts, and this is important, we don't wait for the stochastic to turn. Stochastics, like almost all indicators other than the Danielcode, are lagging indicators. They won't turn until it's already happened on the chart. And that's too late for us. So what we're looking for here is we're simply looking for the stochastic oscillators to get overbought, that's above 80%, or oversold, that's below 20%. Now you can fudge those numbers a little bit. 78, 79% is close enough. So just looking at our first blue arrow, that's the bar that went through the 791.70 Daniel number, but closed exactly on it, we can see that we've got the Daniel recognition, the market recognizing that Daniel code number by closing on it. And if we look at our two oscillators, our fast oscillator and our slow oscillator, they are both oversold. So that's now giving us a Daniel code setup bar. It's met the rules required. It's given recognition of the Daniel code number. The fast oscillator is oversold. The slow oscillator is oversold. That gives us a very high probability of a market reversal right there. And you can see what happens the next day is a little inside day where the low sits again on the Daniel code number and then it's off. 1, 2, 3, 4, 5, 6, 7, 8, 9 days straight into the high. The market then comes down again and you'll notice there's no arrow on it, but it recognises 791.70 again on its trip down, but this time the oscillators are not in a position to signal a reversal and the market continues down to the point of the second blue arrow. And that's the bar that's now sitting on the Daniel code number as it was 5 and 6 days earlier, but look what's happened to the oscillators. They've now both got down into an oversold position. So exactly the same thing. We have recognition of the Daniel code number. We have the bar closing on having its low on the Daniel code number. We have our slow stochastic in an oversold position. We have our fast stochastic in an oversold position. We get a reversal there, which is what the Daniel code is all about. It shows you reversal points and continuation points. We get the reversal there, and look what happens. It goes up 2 days, and on the second day up, its high goes to the old Daniel code number. It's just showing us that it knows where these numbers are. On the third day, it opens and has its high, where the previous bar had its close, at the Daniel code number. Again, it's just showing us it knows where these numbers are. And then whoosh, it's off. And we get a monster trade up. Now, quite separate to that low which gave us that wonderful trade up was a TO3 signal, which is referred to on other videos.